Hey, South Central Stocks. I hear what you're saying about investing, but I really don't have the time. I'm working 10 hours a day. I got 5 kids. I come home, I got a wife. I really don't have the time to research stocks like you do. Help me out, man, because I want to invest. So what can I do? Hey, Mr. Hard Worker. I was just like you, minus the 5 kids, that is. Working hard, 10-hour days, 6 days a week. But if you want to start investing without having to do a lot of research in individual stocks, I'm going to tell you a good place to start. Let's talk about ETFs, South Central Stocks. Let's get to it. South Central Stocks, let's get to it. What is the ETF? It stands for Exchange Traded Fund. Basically, it's a collection or group of stocks that can be sold or bought, basically traded as an individual stock. And an ETF normally caters towards a certain sector in the market. And as we all know, there are 11 sectors in the market: technology, healthcare, consumer staples, energy, consumer discretion, industrial, real estate, utilities, information technology, and I believe financials. So ETFs are based, the stocks in the ETFs are usually based around those particular sectors, the sectors that are in the market. They're usually, all the stocks are usually based around one particular, it'll be certain stocks, like for instance, in technology, it'll be, several stocks that are all based around that particular sector. Or for instance, like consumer discretion, the same way. All the stocks in those particular ETFs will be all based around that particular sector of the market. The thing about ETFs is that they are actively managed, meaning that during the course of the year or whatever time period, they can be rotated in and out based on their performance. You know what I mean? So they're actively managed. So due to the fact that they're actively managed, they always inquire expense ratio. Most of the ETFs, an expense ratio is basically to handle all the administrative or the operating fees for the ETFs to be managed. So, as an example, watch my screen. Okay, so we'll start with the QQQ. I like to use the daily chart. That's one of my favorite charts to look at the progression of a stock to see kind of day to day how it's been going. And as you can see, the QQQ was up here. It was at 382, probably about 7, 8, maybe 10 days ago. And it's been on a little incline right here. It went as low as 350 within the last 8 days. And right now, it retreated kind of back to 361 as right now in after hours, so that's good. And if you look at, let's look at the monthly. This is what I like to, if you really take a step back and look, you can really see the overall progression of this stock. So if you look, it was at 68 bucks, what was that, in 2013, and it made progress all the way. It stands at 361 today. And it was as low as during the pandemic, as low as 141, I believe it was. What? No, it was low as went as low as 164.93 last year, and it recovered, and now it's back at 359. So QQQ is definitely one of the top ones. And the thing about the QQQ is that it's a technology stock, so it has all the top technology stocks: Apple, Microsoft, you name it, and it's gonna keep progressing. Look over a month. Look how it's progressed. It's going to keep progressing, as technology keeps increasing over the years. Okay, so another one. Sorry about that. We'll go to another one. Okay. I speak about this one a lot. It's the Cathie Wood Innovation ETF. Once again, I'll do the daily. As you can see, daily, this one has been on the incline as well.
It was up to 126 about 10, 15 days ago. And you see now it's down to one. It went as low as 106.35 and then rebounded back. Now it's at 110. And this is pretty much an innovation ETF, which means it has a lot of stocks that are going to be innovative for the future, that are going to pretty much disrupt things that are happening in today's world, and it's going to be disruptive in the future. And these are stocks probably that are going to pretty much be on the rise when it comes to around 20, 25, 26, around that time. Look at the monthly. As you see how it's progressed, it was at 33 bucks last year. It was at 33 bucks. You could have got this stock in March. It was as low as 33 bucks, and it rebounded all the way to 159 right here in what was that, February of this year. And it's been on a small incline, I guess, since then, and it's retreated back to 110. But if you're holding this stock long term, it's definitely a good outlook. As you can see, it's definitely progress over the quarters and the years. And one more I want to look at is the VOO. There's another one I'm invested in, which is the Vanguard S&P 500. And once again, the S&P 500 tracks the top 500 companies in the stock market. So all the big companies, any company you could think of, McDonald's, like I always say, Apple, Microsoft, any of the Facebooks, the big dogs, the Googles, the top 500 companies in America, they're going to be in the VOO, the S&P 500. And so, as you see right here with the daily chart, it's been on the incline as well. The whole stock market's been on the incline pretty much the last couple of weeks, but it went from 417 to down to 399, and it sits around like about 478 as of right now. But look at the progression of this overall. You could have got this stock at one, let's just look right here. In 2016, this whole overall was worth approximately about 175, I say, on average. And it's been as high as 417. It's overall high, 417.44, and it's just about 400 right now. And basically, that the VOO just mimics what the overall performance of the S&P 500, which the S&P 500 tracks the top 500 stocks in the market. So you can't lose with when you're tracking basically all the top 500 companies in America, because even if one has a bad day, the other ones will pick it up. Look at this yearly progression. Definitely good investment. So yeah.
You can definitely get better returns if you invest in individual stocks. However, an ETF is definitely a good investment because it's less riskier when you invest in an ETF, because you have a group of stocks that work together. So if two of your stocks or a few of your stocks are having a bad day, but the rest of the stocks are having, doing pretty good, that makes up for it. In the same way, it can go like if a few stocks are having a good day and the rest are having a bad day, it can go the other way as well. But overall, ETFs are good investments because they bring back good returns. Check this. Okay, and also let me show you right here. You could also go on Yahoo Finance. I'll put in QQQ, and you can actually see the performance of how that particular ETF has been doing. So for this one, QQQ, as you can see, on the 52-week range right here, the low has been 266.97, and the high's been 382.78. As you go down, you can kind of see the performance of it. See, you see 1 year about a 36% return. That's better than a bank account. 3 years, it brought back 27.89%. That's not bad. And you can even see right here the top holdings. Some of it shows you some of that. This is the top 5 or the top 6 holdings: Apple, Microsoft, Amazon, Facebook. I don't know. They got Facebook twice there for some reason. I don't know why, but pretty much, yeah. And it shows you, if you look over here on the side, it'll show you how pretty much the what percentage of that particular stock that it holds. So let's look at another one. Another one I'm investing in, the ARK
QQK, the innovation ETF. And as you can see, it's 110.98 right now. On the year, it's been 89.39 that has been the low, and 159.70 has been the high. So it's kind of in the middle, or more to the lower end, though, I would say. And once again, you can check that stock's performance as well. As you can see, year to date, it hasn't been doing that well. It's kind of down, -3%, but not much. 1 year, it brought back 42% return. That's more than half, a little less than half of what, the investment. And in 3 years, almost 40%. So as you can see, ETFs show they definitely have progression. And then okay, let's look at one more. Let's go with the VOO. Let's look at that one. That one pretty much tracks the S&P 500 with the top 500 companies in the market. And as we look at that one, it's $400 right now, $400.88. $400.88. It's been low as $296.36 on the year, and high as $417.44. So that's a pretty nice little wide range. And then if you check the performance of a year to date, it's brought back 20% returns, which is very good. 34% after a year, and 18% as of 3 years. And like I said, down here you look at some of the holdings of VOO, Apple, Microsoft, Amazon, Facebook, Google. So a lot of these, a lot of the ones I have a lot of the same stocks because I'm into, information, but at the same time they're diversified because they carry, they're diversified because they carry different stocks as well. But they definitely have a strong hold on those main companies in there. As you see in this one, the percentages are a little lower. Like it has 5% Apple, 5% Microsoft, 4% Amazon, 2% Google. So that's one thing that might be different from ETF to ETF is the allocation or the percentage of each stock. So yeah.
So regardless if you have time to do research or not, you should definitely invest in ETFs because ETFs, they bring back good returns over the year. Do the research on them. Find out which sector will best cater to your likings, or look into the stocks, the holdings that are within that ETF, the holdings, and see which one cater to your liking. Look at the yearly progression on the chart, see if it's been progressing over the years, see if it has potential. You can look into if they pay dividends. Some ETF pay dividends, some don't. Some just reinvest back into the ETF or reinvest into it to get more stocks, to make the ETF grow, basically. And then some pay dividends. They have older companies in there that have been established for years, and they don't really need to be as developed as some of the newer companies, and they pay dividends. So definitely, you should look into it to see which one has things that cater more to your liking. So that's it, South Central Stocks. Thanks for watching. I'll see you guys on Friday. Peace.